Well, our next guest says memory chips are poised to remain in a glut. Let's dive deep into that story with Ray Wang, principal analyst and founder at Constellation Research. Ray, as Inez pointed out, I mean, it sort of seems like investors are kind of taking this all in stride. You've said these boom-bust cycles are just part of the sector. How big of a concern are these numbers coming out of Samsung?
You know, Samsung is a bellwether. You saw the, reports that came from Micron. Basically, we've gone from a chip, scarcity in chips to glut. And I think this is one of the challenges that happens. And these are typical cycles. These are 2-year cycles that we see across in the market. And in this $500 billion market, we're expecting a 5 to 6% decrease in demand. Now, part of this is because we've gone from products to services. We came out of the pandemic. Everyone bought what they wanted. Then they wanted to get the experiences. China's got to go through that cycle as well. And that just means more access to being able to get the compute power is going to be much more important than getting chips into devices. And we're starting to see that happen in the marketplace.
So, Ray, how likely is it that Samsung will follow Micron's strategy of reducing production to really lift, especially the memory market?
Well, they definitely actually have to take that strategy because there is a glut. What actually happened in the pandemic is people basically overstocked because they couldn't get the chips that they needed, and there was a messed up model that was going on in terms of what supply was required. So the demand and the supply models were basically not in alignment, and we're starting to see that effect. And this is going to take about 6 to 8 quarters to recover.
So, Ray, that begs the question. I mean, we have seen so much investment, at least in the U.S., going into chip production. This is part of the Biden administration's push to try and build back at home. The concern all along has been this very issue you're pointing out, which is that there will be overproduction and a glut there as well. I realize right now we're talking about 6 to 8 months, but I wonder if you think there are knock-on effects beyond that we should be taking a look at, given where the investments have gone.
Well, the knock-on effects, you're right. One of them is really the chip restrictions to China. So we're going to overall have a lower demand, especially more specialty chips and more advanced chips. And the chip plants that you're talking about is the $39 billion investment that we see with TSMC. That's going to be in Phoenix and basically 2 brand new plants, right? And we're talking about new types of chips that are popping up, the 3-nanometer chips that are going to be produced. Those are going to be new chips. So they'll be a little bit different in terms of what's in the marketplace. But we are basically seeing a flattening of demand at the moment, but that will change in about 24 months. And it takes a while to put a chip plant up and running. And so this decoupling and deglobalization in terms of supply chains in China, that's going to take effect not just here in the US, it's going to take effect in Europe as well, as they're looking to be able to create chip production. And of course, other parts of Asia that's trying to reduce their reliance on China.
And as you mentioned, that 3-nanometer chip, obviously the most cutting edge, and you're expecting Apple to lead the way in this. But Taiwan Semiconductor charges a pretty hefty price tag for these chips. What does that mean for what could potentially be for the cost of these phones when demand is already starting to weaken?
So the global demand on phones is slightly dropping at the moment. I think especially on the high-end phones, that's going to actually have some impact. But Apple's typically earlier than everyone else jumping into this market. You might see a delay in terms of how quickly those 3-nanometer chips are going to be consumed. But we also see a specialty chip market that's emerging. And I think the specialty chips, as we've heard in the auto business, you're going to see that as chips become more specialized in terms of their use. Those chips are actually going to play a role in terms of increasing demand for specialty areas as opposed to the general memory chips that we see today.
And Ray, while we're seeing some investors really kind of take the news today in stride, the semiconductor sector as a whole has been hit hard. Feels like a good time to buy. I mean, when you're looking at some of these names, who offers the most value, you think?
Well, right now, the most value are in a couple areas. AMD, given where they're poised. We see this here at CES this year. Some very interesting chips are being popped up. NVIDIA as well, in terms of their investment, in terms of what's required for AI and what's happening in large, high-scale compute. Broadcom's an interesting play because they have a much more diversified offering with the recent acquisition or to-be-completed acquisition of VMware. And, of course, Analog Devices is out there. And then, of course, for those who are actually playing in the market with TSMC looks like a potential winner in the long run.
Always great to get your insights. Ray Wang there, principal analyst and founder at Constellation Research. Have a great weekend.